There's some major changes coming to the housing industry in 2023. Make sure you stay to the end of the video so you can see some of the key points that some of these major publications are putting out so you can decide if 2023 is going to be the right time for you to purchase a house. So as you can see, we have a different backdrop today. I'm actually shooting at my house because we are in the process of moving to our new office, which we've actually shot a video about that. So make sure you stay tuned. In the next couple of weeks, we'll be rolling out some new videos and content from our new office. But today I'm in my home office and we want to talk about the housing market next year because everyone's got an opinion as to what's going to happen. We're going to see this massive crash, or will things start to plateau a little more and maybe rebound towards the second half of the year? There's a couple of reports that have came out recently. I'm gonna talk about some of the information that Redfin just put out in their 2023 predictions and some things that stood out to me, and then you can decide for yourself whether or not that means anything to you or actually what you think. So make sure you comment below on some of these topics we're talking about today because I'd love to hear your feedback and your thoughts as well. So one of the predictions that Redfin has in their report, they're saying that they predict interest rates to decline to about 5.8% by the end of 2023. So you all remember the beginning of this year, we were in the threes. About the summertime in July or so, rates spiked to about 7%. And we've kind of been hovering around that 6 and 7% for the last several months. Rates got a little better after the Fed meeting in November. And then they're meeting again next week as we shoot this video, which I think interest rates are going to come down again. Now, remember, when I say interest rates for this video, I am referring to mortgage rates. So the Fed is increasing the Fed funds rate, but that's not the mortgage rate. A lot of people get that confused and they automatically assimilate the two being the same thing, but they're not. I think mortgage rates are going to start trending downwards going into 2023 and going forward. Now, my reasoning behind that is I think inflation is coming down. It's coming down slowly, ever so slowly, even though we don't necessarily feel it, because I'm sure you guys are still overpaying for groceries and everything else that comes along with it. I know the other weekend I was at Whole Foods getting some groceries with my girlfriend, and we walked out of the store with 4 bags of food, and I think it was like 250 bucks, and I was like, holy crap, where did I spend all this money? Like, I literally had to look at the receipt to see like what did I actually spend money on. But I think we're all feeling that right now. But I think the CPI number is going to come out a little better, and I think we're going to start to see mortgage rates come down ever so slowly. Now, everyone also is mentioning that we are going to be heading into a recession, and this is probably one of the most anticipated recessions probably in the last 50 plus years. Now, in a recessionary time, mortgage rates have always tended to come down. So even if we do head into this recession, whether it be a mild recession or a deep recession, for the sake of this video, I think if we go into that, rates will come down, which is kind of in line with what the article is saying. And it's kind of in line with some of the mortgage experts that we follow and some of the predictions that they've been making. So I personally think the worst is behind us as far as interest rates go. I don't think we're going to see the 10%, and even some people were predicting 20%. I was even at a mortgage conference recently, and some guy told me he thinks rates are going to go over 20%. I thought he was crazy for even saying that, but he said it with the most conviction that you could ever think about. I really think we're past the worst of it all, and I really agree with this article, and I think rates are going to come down. The next prediction in the article is saying that 2023 is going to be one of the first years in over a decade that we will see a decline in home prices. Crazy as that may sound, and I know a lot of you doomsday people and a lot of you that are betting against the housing market to crash, this is something that doesn't necessarily terrify me about the market, because if the market pulls back 4%, that's not a crash per se, because a crash, you're talking 30, 40, 50% in housing prices like we saw in 2008. And I do not think that we are going to see that, simply because we don't have the inventory on the market to cause that type of crash. Interest rates could go up, but that would stagnate everything. And we've seen that over the last couple of months, because if you're a seller, let's put your seller hat on right now. If you're a seller, you do not need to sell your house and lose your 3% interest rate or your 2.5% interest rate to take a 6 or 7% rate today. There is no incentive for you to sell, unless you absolutely have to do it, which we've had some clients that were getting divorced, or they're moving because of a work situation or anything else. Maybe someone in the family passed away and now the house will be sold so they can move on. But if you have been living in your house for a number of years and you have a ton of equity, what's the purpose of losing the 2 or 3% rate? You're not going to do it. I'm in that situation, and I know a bunch of my friends and colleagues and other clients that are in the same position. That could I sell and make a bunch of money? Yes. but then what am I gonna go buy? There's nothing out there that really appeases me to say I'm gonna lose my 2.5% rate on my house, make $300,000 to go buy a bigger home and take on more debt. So in my opinion, that's the one argument that I have to anyone that says that we're gonna have this crash. You can see here on this slide, straight from the National Association of Realtors, in the last housing crash, inventory was somewhere between 3.8 to 4 million. Right now we're at 1 to 1.2 million. You literally had 3 times more inventory on the market. And here's the thing, the banks learned from the mistake that they made during the last crash because they foreclosed on people and then they flooded the market with inventory. They're not gonna make that mistake again. And you can see that it's evident because banks have been coming out and they've been creating their own rental portfolios, and they would just do the same thing. Even if they foreclose on your house, they may sell some of that inventory, but I bet the majority of it, they keep it in-house and they turn it into a rental because they want to turn us into a renter's nation. And you can also look at the builders' confidence because they've also been pulling back on their building permits. So if the builders aren't putting out more inventory, that again suppresses the amount of homes that come on the market. So if a seller doesn't want to sell and the builders don't want to build as fast and they want to control their supply, and the banks aren't going to be stupid enough to flood the market with inventory again, where is the inventory coming from? There will be no inventory. And whatever homes are on the market will sit there, and if a buyer wants to buy it, they'll have all the negotiating power to do it because that seller may need to sell for a specific reason and they may be willing to take a haircut like we've seen over the last several months because the sellers are now becoming more realistic with the value of their home. Just like you as a home buyer want a 2% or 3% interest rate, home sellers want to sell their house for $50,000 above the last house that sold across the street. But now in the new reality that we're in, that's not going to happen. So I think this pullback that we are seeing right now, or the correction, however you want to define it, I think it's something that had to happen, and I don't think it's a crash. The media and everyone else will portray it because these headlines are so sensationalized these days, it's crazy. But if you actually read an article, it more often than not will contradict what the title says, and it's going to say it's not that bad because home prices are declining by 4%. 4%, you could get that in a seller credit. If you were buying a $500,000 house, the seller could probably credit you for maybe even 6% in closing costs and helping you buy down your interest rate. That's not necessarily a bad deal. So I think that's something to really keep an eye on because there's going to be half of the population that will look at that headline and say the market's crashing and they're not going to buy and they're going to wait. Then there's going to be the other half that say now's the time that I can capitalize on the market and maybe I can negotiate a better deal, I can get better terms, and I can take my time looking at the house compared to what it was over the last couple of years. Now, the scary thing to think about in 2023, and again, for a lot of you that are wanting the market to collapse and the market to crash, this is one thing I caution you of because if we head into that type of environment, one of the things that will impact you the most is your employment. We haven't seen unemployment rise significantly like compared to what it was during the last crash in 2008. So if you factor that in, you might be betting that the market needs to go down, prices need to come down, inflation needs to come down. But what if you lose your job? Because there's always a cause and effect. So if inflation is still running high and the government can't figure out how to slow things down, people will begin to get laid off and that number is going to creep up. So that's why I never really bet against the market to say that I want the market to crash because it's going to cause a huge wave of problems for so many people out there, whether you do live in your house and you own it or you're renting. Because if you can't pay your rent and you have no job, where are you going to live? Now, on the flip side, if you own your home and you don't have a job, you probably have some equity and you could probably sell it or maybe get a forbearance and you could stay in your home and hopefully try to figure things out. But remember, if you want a massive crash, think about what happened during the 2008 market. I was fresh out of college. I had a bachelor's degree. I had a double major. I couldn't get a job anywhere. There were guys that had MBAs, doctorates that were getting fired that could not get a job. Why? Because you were either overqualified or they just weren't willing to pay you anything, so you never took the job. So think about that again. In this world that we're in today, you could have all the credentials in the world, you could make great money, but if you don't have the ability to go to work, your thought of buying a house is out the window. And that's why I don't think betting against the market or saying that we need to have this crash or I want to have this crash happen is a smart thing, because you're really hoping that a lot of other people are going to lose just so you could buy a house. I do think that this pullback that we are seeing, I think it is healthy, and I think we do need it because things were just too crazy for too long. However, whether we lose 10 or 20% in value in most parts of the country, that probably brings you back down to 2018, 2019 prices right before things got crazy with COVID. So it's not that bad. And I think interest rates will come down eventually. And again, there's so many of you that are on the sidelines that want to buy. I know with my team alone, we've got over 200 people that are shopping for houses right now all across the country. They're approved and ready to buy. So there is a massive amount of people sitting on the sidelines waiting for something to happen. But again, if the market continues to erode away slowly, I think there's a good opportunity out there with the right team in place. And I've always said this in every video. Make sure you have a good lender, make sure you have a good real estate agent. Those two people who understand the market will help you navigate and make the best offer. Now, some of you are gonna say, well, of course you want people to buy houses. I think there's people that are still going to win in any market, no matter what. You could make the argument back in 2011 when home values kept declining month over month that you shouldn't have bought then. But I've got an entire database of people that bought homes that are millionaires today. So in my opinion, there's always a good time to buy, but you need to figure out what works for you. If your biggest issue is affordability, then figure out what do you need to do to qualify at the price range of maybe where we are today or where will we be in 6 months. If it's something where you absolutely need interest rates to come down to qualify for the house you want, find out what is that price point and what does the rate need to be for you to get into your home. If it's your credit, work on your credit. If it's budgeting and figuring out maybe paying off some debt, then figure that part out too. So many people have a reprieve right now of paying on their student loans. So take that extra cash, maybe pay off your credit cards. Get yourself in a position so that way you are okay in the event we head into a recession, because again, we can look over the last 50 years, anytime we head into a recession, home values do okay. So these graphs hold true over the last 50 plus years that if we head into a recession, home values go up and interest rates come down. There's a potential that we could see that in the summer of next year, maybe even sooner. So if that's the case, are you gonna wait until rates come down and then every other buyer comes back in the market? If that's the case and that's what you're gonna do, make sure you're saving money because it's gonna go right back to what we seen during COVID. You need to come in above the asking price and you're gonna have to pay for all your closing costs. So make sure that if that's what you're waiting for, you're well prepared. If not, you're gonna miss the boat just like you did in 2020, and you're gonna be waiting around and you're gonna have this woulda, coulda, shoulda, when I've been telling you for the last couple of years on my channel, plan it in advance. And that's what we do here. That's what my team can help you get qualified for. And if you wanna look at your own scenario, send me an email. I'll be happy to look at that for you and come up with a custom game plan so you don't miss the boat. Thanks for watching, and I'll see you on the next video.